India's biggest e-scooter maker, Ola Electric Mobility, is looking to raise as much as Rs 5,500 crore in an initial public offering, the biggest one this year so far, that will test investor appetite for the EV makers amid increasing adoption. India's first pure-play EV company will raise another 646 crore through an offer for sale by the promoter groups and some investors. The startup has set a price range of Rs 72 to Rs 76 per share for its IPO. The bidding starts on 2nd August and closes on 6th August, while the shares are expected to start trading on August 9. Ola Electric has lowered the pricing for the IPO to attract more investors. At the upper price band, the post-issue market valuation comes to around Rs 33,522 crore. Founder Bhavish Agarwal is selling as much as 3.8 crore equity shares, the biggest chunk, and post this IPO, his stake will drop to 37% from 45%. Investors SoftBank Group and Tiger Global are selling 2.4 crore shares and 65 lakh shares respectively. A promoter entity, Indus Trust, would also be selling up to 41.79 lakh equity shares. Further, the company has reserved up to 5.5 crore worth of shares for its employees. Now, up to 75% of shares, excluding employees' portion, are reserved for qualified institutional buyers, 15% for non-institutional investors, and the remaining 10% for retail investors. Investors can bid for a minimum of 195 shares of Ola Electric IPO in one lot and in multiples thereafter. The minimum amount required by a retail investor to bid for Ola Electric IPO is Rs 14,820. Ahead of the IPO, the company's shares are trading with a premium of Rs 15 in the unlisted market. Now, according to a Reuters report, at least 4 Indian mutual funds, including SBI, HDFC, UTI and Nippon India, will place bids for the IPO. Ola commanded a 48% share in electric two-wheeler segment in June 2024 quarter. However, it continued to report losses at the operating level in FY24. Additionally, EV growth in the country relies on government subsidies, which are decreasing, while value-conscious buyers remain concerned about the mileage of EV models. Now, given these factors, high-risk investors wanting exposure to the EV opportunity may consider investing in the company's IPO. Ola Electric aims to use proceeds from the share sale for activities like working capital expenditure of ARM OCT, Rs 800 crore for repayment of subsidiaries' debt, among other reasons. Now let's move on to the most important question. Should you subscribe to this IPO or not? Here's what top brokerages have to say. At the upper price band, the company is valued at a market cap to sales ratio of 6.6 times. Currently, top global automobile companies are trading with a market cap to sales ratio between 1x and 8x. Therefore, on the valuation front, Anand Rathi believes that the company is richly priced and recommends subscribe for long-term rating to the IPO with a high risk appetite. LKP Securities also advises investors to subscribe from a long-term perspective. Analysts believe that Ola Electric, being the market leader in the domestic EV two-wheelers industry, stands to benefit from any positive developments in the sector. The range of new launches along with EV bike launches next year should enable the company to retain its market share, said the brokerage in its report.